Okay, so Palantir is going to make a lot of people rich. Now, here's the thing. This stock was absolutely obscure in 2019. Then 2020 comes in, the stock goes public, and the whole meme action takes it to the moon. Everybody's now talking about it. It drops back to the floor. People forget about it. Now it's up again, so people are talking about it again. But this is absolutely irrelevant. I believe that Palantir, for the few who actually understand this, is going to make people extremely wealthy. Now, here's the point. Despite the newfound fame, despite the fact that the stock did 160% of the past 4 years, despite it being up 44% just in the past 6 months, Palantir is nowhere close to even scratching the surface of its true potential. And it's going to make a lot of people really, really sorry for not looking into this on time. Now, there's a few people who actually understand the stock, and the community is growing, and I'm happy about it. But the vast majority just doesn't get it. Now, hopefully this video opens up Palantir to a wider audience, which is at the end of the day what I've been doing on my channel. That's why some people call me the Palantir guy. By some people, I mean my mom, but that's a whole different video. Now, look, right now, Palantir has 3 businesses that I want to talk about today. Gotham, which is the government business, very little known, but if you look at the numbers, extremely lucrative. On the other hand, we have Foundry. Now, Foundry is the commercial business. Foundry and Gotham used to be the only core businesses of Palantir that actually mattered. Now, over the past year and a half, we have seen AIP emerge completely out of the underground and take over both of them. Right now, AIP, the new game changer for Palantir, is going to be bigger than both of them combined because AIP is the future of Palantir. Don't look at this current 21% revenue growth year over year. This is irrelevant. This is before the explosion. That 21% is meaningless. If I'm right about this, that 21% is going to look like child's play in just a little while. You gotta have patience. Like Tom Lee said, every great idea needs patience. Nothing happens overnight. Now, look, if I just kind of boil it down to one simple explanation, AIP is just the operating system of every single large language model companies use out there. As you've seen over the past year and a half, ever since the launch of ChatGPT, the whole large language models, LLM, has become the new economy. Every single company now understands that in order to do business, they have to have an LLM, an AI-based operating system. The problem is that a lot of these are convoluted. A lot of data doesn't match. There's a big chaotic mess. Now, Palantir comes out with AIP is the equivalent of Microsoft coming out with Windows, something to operate the hardware. We have all the Nvidia stuff right now running up like crazy because people understand that everybody wants an Nvidia chip, an Nvidia server base. Now, the whole thing about AIP and Foundry and Palantir is that people still haven't gotten that Palantir and AIP is literally the software side of the Nvidia hardware side of the AI operation. The whole thing here is very, very simple. Nvidia now is well understood, so people are piling into it like crazy. On the other hand, while the hardware stuff is clearly owned by Nvidia, quasi-monopolistic way, the other side, which is the software side, which is already being kind of owned by Palantir and it's getting stronger by the day, that hasn't been priced in yet. The current market price of Palantir definitely shows a premium for sure. I mean, every great company runs on a premium. That's fine. But the current pricing does not reflect the understanding that AIP is the equivalent of the Nvidia Blackwell chip. Let's put it, or the H200, doesn't matter. Software, hardware, or rather hardware, software. Now, it's very simple. Once people understand that, and it might take a few quarters, maybe a year or two, they're going to pile into Palantir just like they did into Nvidia. By that point, it's going to be too late for you to get in on time. Very, very simple. Now, obviously, I'm not telling you to buy Palantir or any other company. I'm just explaining my thesis and my own personal opinion. I'm not giving you investment advice here. Now, look, I know that the CEO of Palantir is unorthodox. I know he's not normal, but fuck normal. Who wants a normal CEO? We've seen what Frank Slootman did with Snowflake. We'll talk about Snowflake in a second. The big bad Snowflake that was supposed to be way better than Palantir. We'll talk about that in a second, like I promised. So yes, Alex Karp, the founder, CEO of Palantir, who's been in this business and dedicated his life for this company, who's been there for 20 years, is unorthodox. And sure, he may have opinions that you guys don't agree with. And I don't care. Neither does he. That's the whole point. Alex Karp does not care what you think about his opinions or, in fact, what you think about him or his company. He's going to say and do whatever he thinks is the right thing. That's why he's supporting Israel. That's why he's saying what he's saying. He does not care. Now look, The fact of the matter is that despite him being unorthodox and not normal, what the fuck normal is anyway, he is delivering results. He's the founder. He's been there for 20 years. Look at the results he delivered the past 20 years. Look at the force of nature this guy is, and look at the fact that he has principles. He wouldn't sell for $1. I like that. And that is the reason that Palantir is worth, in my opinion, a lot more than it's currently trading for. Now look, right now we're witnessing the change in the whole paradigm of how Palantir operates in the commercial side of things. Now Palantir has conquered the military side, Department of Defense. They understand that Palantir is a must. On the commercial side, we've seen this problem with Palantir marketing. Basically, what we've seen is that Palantir had trouble getting in through companies because you need a point of contact. That point of contact usually spent a lot of the company's money on a solution that Palantir comes in and potentially wants to replace. We have something that's cheaper, better, etc., etc. There's a lot of ego, a lot of politics, and a lot of blocking by point of contacts in a lot of these companies who don't let Palantir in. That was the reality up until 2 years ago. And 2 years ago, I told you in the video, I told you, one point this whole thing is going to flip over because the cost of not bringing on Palantir is going to be way more significant than the cost of losing your job. Because at the end of the day, what's going to happen is that certain competitors will use Palantir. They're going to outperform you. They're going to drive you out of business. And if you don't bring Palantir in to match, you're going to lose your job and this business is going to collapse. Quite simple. And it's literally what's happening. It started with Airbus, how Airbus literally overtook Boeing by just doing one simple thing, which is using Foundry and losing basically Skywise to absolutely change the way they assemble planes, the whole supply chain, the management of the fleets. Go research Skywise and how Skywise completely transformed Airbus into what it is today. And now compare Skywise to what's going on with Airbus and Boeing. Now, look. Don't sleep on the government business as well. I've just mentioned that they've conquered it. Hey, it's still growing at like 15, 16% per year. The top 20 clients on the government side are paying a lot of money for Palantir. I'm talking about 20, 30, 40 million a year from these clients. Now, I invest in Palantir in one simple reason. I like industry leaders. That's why I like Nvidia. That's why I like Tesla. And that's why I like Palantir. All those companies are quasi-monopolistic. And I like the fact that they have massive growth. Now, don't get me wrong, that 21% is not what I'm talking about. That 21% is meaningless. 21% year-over-year revenue growth they got right now is bullshit. I don't care about that. I look at the 1,000 boot camps they had over the past year. I look at the 42% customer growth. I look at the 87, 1 million or more deals they've signed just in the first quarter of 2024. Now, look, they also have a lot of growth in the institutional holding. A lot of people are sleeping on this. When Palantir was unknown, when Palantir was kind of under the radar, one of the main knocks on it was that there's not enough institutional shareholding in this company. Only 30% a couple years ago. Right now it's at 42% and it's climbing by the minute. As you're being told by mainstream media to stay away from this company, institutional shareholders are buying like crazy. In 2021, in fact, in Q2 of 2021, literally 3 years ago, we had 400 million shares held by institutionals. Right now, more than double. Now, we ran Palantir through our scorecard on Stock MVP, stock-mp.com. It came out with 85. It's the same score we have for Nvidia and for Tesla. They've only lost points on two things. Number one, the institutional shareholding is below 50%, and it's going to get there very, very soon. And also, their PE is above 30. Oh my God. Now, another thing is the PE. Look at their current PE. If the current PE is 176, oh my God, stay away from it. Look at the forward PE. Don't look at the current PE. The forward PE is not the past. It is what you need to be looking at. The forward PE for Palantir is 60. It's still premium, but it's 60. It's not 176. Now, give it another quarter, another 2 quarters, another year. That thing is going to come down to 40, maybe then to 30. It's going to catch up with its valuation. It's just a question of time. Now, look at the operating income. Over the past year, Palantir grew its operating income by 267%. You heard me right. 267% increase in operating income in a single year. At the same time, your favorite stock, Snowflake, has lost 26% in operating income. Net income is up 219% of the past year. Snowflake lost 8% in that same time frame. Debt down 16%, which means Palantir repaid 16%. Snowflake increased its debt by 9%. Forward PE of Palantir is 60. Forward PE of the value Warren Buffett Snowflake is 128. Snowflake is literally selling for more than double. With a declining business, is zero moat, and a low ticket item, while Palantir has the keys to the future. And that's why my price target based on my extremely conservative model, which means my worst case analysis for Palantir in 5 years. 2029 price targets. Bear case 42. That's a 78% in 5 years. Not bad. Medium case $94 per share. That's a 300%. And my bull case is 146 per share by 2029. That's a 517% in 5 years. I'll take it. And of course, if you haven't yet, we invite you to join our Discord. It's free. Discord.gg/Tom Nash. Join our 11,000 member Discord. Talk about Palantir. Talk about other stocks. We would love to see you there. And if you want to take the next step, join the Academy at Patreon. Patreon.com/Tom Nash. Would love to see you there as well. We have a growing list of students who are learning how to be a better long-term investor. And if you haven't yet, check out Stock MVP, a platform to analyze stocks like Palantir, which I've built for you, the retail investor, at a fraction of the cost of other tools. Stock-mvp.com. Check it out. Try it out for 1 week for free before you commit to it. Thank you so much. Go Palantir. Love Alex Karp. I'll see you in the next video.